Good morning everyone. I am S. Poongodi, Assistant Professor, PG Department of Commerce CA, Vellalar College for Women. Today I want to discuss about auditing and its objectives, advantages and limitations. Auditing. The word audit is derived from Latin word audire, which means to hear. Auditing is the verification of financial position as disclosed by the financial statements. It is an examination of accounts to ascertain whether the financial statements give a true and fair view of financial position and profit or loss of the business. Auditing is the intelligent and critical test of accuracy, adequacy, and dependability of accounting data and accounting standards. Let us see about its meaning and definition. Auditing refers to the evaluation of financial records to ensure accuracy and compliance. It involves a thorough review of transactions, internal controls, and financial statements. The process helps identify discrepancies and enhances the reliability of financial information. Definition. According to Motts, auditing is concerned with the verification of accounting data, determining the accuracy and reliability of accounting statements and reports. Let me next highlight the objectives of auditing. The objectives of auditing have been classified under two heads: main objective and then subsidiary objectives. Subsidiary objectives classified under two heads: detection and prevention of fraud, detection and prevention of errors. The primary objectives which acquire more prominence are as follows. The main objective of the auditing is to find reliability of financial position and profit and loss statements, to ensure that the accounts reveal a true and fair view of the business and its transaction, to verify and establish that at a given date, balance sheet present true and fair view of financial position of the business. It is to be established that accounting statements satisfy certain degree of reliability. The next subsidiary objectives: detection and prevention of fraud. The one of the important subsidiary objectives of auditing is the detection and prevention of fraud. Fraud refers to intentional mispresentation of financial information. Frauds may involve manipulation, falsification, or alteration of records or documentations, misappropriation of asset, suppression of effect of transactions from records or documents, recording of transactions without substance. The next, detection and prevention of errors. It is another important objectives of auditing. Auditing ensures that there is no misstatement in the financial statements. Error can be detected through checking and vouching thoroughly books of accounts, ledger accounts, vouchers and other relevant information. Next is types of audits. There are several types of audits including internal and external audits. Internal audits focus on operational efficiency, while internal audits provide an independent review. All the activities of business has its own pros and cons, and auditing is no way exception in this. Now let us see the advantages and limitations of the same. Auditing offers numerous benefits such as enhancing creditability of financial statements, identifying inefficiencies, and ensuring compliance with laws. It also helps organizations build trust with stakeholders and can lead to improved financial management and decision making. The main advantages of auditing are as follows: improved financial accuracy, detection and prevention of fraud, regulatory compliance, improved internal controls, increased operational efficiency, facilitates decision making, assurance to stakeholders, reduced risk misstatement, support in raising capital, long-term sustainability. Then limitations of auditing. Despite its benefits, auditing has limitations. It may not detect all fraudulent activities, and the audit process can be time-consuming and costly. Additionally, auditors rely on the information provided by management, which may not always be complete or accurate. The main limitations are as follows: costly, rely on expert, impossibility of checking all transaction, unsuitable for small concern, chances of fraud. Now let me highlight the audit process and the role of internal and external auditors. The audit process typically involves several key steps: planning, fieldwork, reporting, and follow-up. Each step is crucial for ensuring a through evaluation of financial records and effective communication of findings to stakeholders. How an audit is conducted. First step, preliminary discussion, then audit outline, engagement memo, entrance meeting. The main process, testing and interview and analysis, and then observations, discussion and management agreement. Finally, preliminary report and exit meeting, then final report. Role of internal auditors. Internal auditors play a vital role in organizations by providing an independent assessment of internal controls and risk management process. They help ensure that operations are efficient and compliant with policies, ultimately contributing to organizational success. Role of external auditors. External auditors are independent professionals who evaluate the fairness of financial statements. They provide assurance to stakeholders that the financial reports are free from material misstatements, enhancing the credibility of the organization. Seeing all these as base, let us explore about the future plan, auditing. The future auditing is evolving with advancement in technology and data analytics. Automation and AI are streamlining the audit process, allowing for more efficient and effective evaluations of financial data, enhancing the role of auditors. Let us see the common audit challenges faced by organization. Auditors often face challenges such as data integrity, adapting to changing regulations, and managing client expectations. Addressing these challenges is crucial for maintaining the effectiveness and relevance of the audit process. And finally, let me conclude the above views for conclusion. In conclusion, auditing is a critical function that promotes transparency, accountability, and trust in financial reporting. Understanding its definitions, advantages, limitations, and objectives is essential for stakeholders to make informed decisions and ensure organizational integrity. Thank you.